Title insurance. What is it? And do you need it when you buy a home?
What is title insurance?
In essence, it protects home buyers and lenders from any losses due to defects in the property's title. Things like unpaid liens or forgery or fraud, things like that could affect homeowner or the lender's interest in the property.
Can you go into the different types of title insurance and the cost of title insurance as well?
There's really two different types of title policies. There's an owner's policy, which a home buyer ends up getting an owner's policy to protect their interest. And then there's a lender's policy that protects the lender's interest in the property until that loan gets paid off. I think it's important to probably just focus on the residential owner's policies that a home buyer would receive when they close escrow. So there's really two main policies. There's the Alta Homeowners policy. That's been around since about the year 2000. Most people, when they buy a property, that's the policy they end up with, assuming they're an owner occupied. This is where they're going to live. And then there's a policy called the CLTA Standard Owner's Policy, which is kind of one of the older policy formats. It does not give you as much coverage as the Alta Homeowners policy. And then the lender gets a lender's policy, a separate policy to protect their interest. The essence of a title policy is protecting the interest of the homeowner from any outside people, forces, things that could really jeopardize their ownership of the property or potentially also create a financial hardship for them because someone's recorded a fraudulent mortgage or things like that. So, really the biggest things are, and I'm going to speak really related to the Alta Homeowners policy because that's really 90% of people buying a home and living in it, they're going to get a homeowner's policy. What's great is when that policy was created, again, right around the year 2000, it really expanded the type of title coverage that was available beyond what was really in that case, maybe 10 points of coverage, and now there's like 30 points of coverage. So it's protecting you against a lot of things that potentially maybe the previous owner had on the property. We want to make sure that those don't carry over to you. So an unpaid lien would be a really good example of that. If, any outstanding mortgages or taxes or mechanics liens, contractor liens, things like that, we're ensuring that if those were to pop up, that we would cover you for that specific problem, an unpaid lien. Fraud and forgery, unfortunately, right now, forgery is a big thing. Fraud, identity theft and things like that. So your title policy covers you for that. If someone fraudulently records a deed at the county recorder's office and you're not even aware of it, they're impersonating you or doing something to jeopardize your interest or, again, to potentially put some kind of a money lien on your property, a title policy, we come into play. You would file a claim with us, and then we jump in and we take care of the attorney fees and we make the bad things go away or we correct them. Another thing that happens is actually errors in public records. So an incorrect legal description gets recorded on a property. We will go back and correct that for you. Boundary and survey issues, depending on where you're at, if you're in a cookie cutter subdivision, it's pretty obvious where your property lines are. But if you're in areas where you're not totally sure and there's ever a dispute there where maybe one of your neighbors says your whole fence and part of your structure is 10 feet onto my property, we come in and we correct that issue. We confirm that there is an issue, and if there is, we figure out a way to make all parties happy and resolve that dispute. So things like that, that's what your title policy is covering. And as far as what it costs, it's based on the sales price of the property. So if you're buying an $800,000 property, that means we're going to issue an $800,000 owner's policy, meaning the maximum amount of coverage from a title defect or lien would be $800,000. So that policy would cost you about $2,300. If you're going to get a loan on the property, your lender is going to require that you buy a title policy to protect their interest. We call that an Alta concurrent because it's concurrent with the owners. That's much less expensive. Let's say you're doing an $800,000 purchase and you're getting a $500,000 loan. You're going to pay the Alta lender's concurrent policy. It's going to be about $800. So it's less, but it is a policy coverage.
And we talk about obviously the homeowners as well as with the lender as well. But if you're buying cash, do you think it's a good idea to get a title policy issued through closing?
Yes, my answer is absolutely. For the cost you have to pay in relation to the coverage you get. And remember, and a reminder actually is just that if you pay a one-time fee and that owner's title policy, it lasts for as long as you or your heirs own the property. So you could own the property 40 years. You're going to pay a one-time fee and you have coverage that whole time. So I think it's a really good use of your money. It's not required. If you're a cash buyer, you don't have to get an owner's title policy. This is my 40th year in the title business. I've I've closed probably 20 or 30,000 deals easily. I've never seen ever one person not get a title insurance policy, just because why wouldn't you protect your ownership interest in a property?
Does transferring the property into a trust affect the title policy?
It might. It just depends on the type of policy you have. So if you have an Alta Homeowners policy, which again has been around for about 25 years, you have automatic coverage for if you took title as an individual and then you transfer into your trust, coverage stays continuous. There's no lapse in coverage there at all. If you don't have a homeowner's policy and you have a CLTA policy, you do not have automatic coverage. The good news is you can go back to your title company. I would always confirm before you transfer property into a trust that you have coverage. You can just ask your title company, hey, do I have coverage for transferring the property in trust? Yes or no. If you do not, because of the type of policy you have, it's a very simple solution. You can purchase a trust transfer endorsement. It's about $100. Very simple to do. You just need to coordinate it with your title company, and then you now have coverage moving forward because you've transferred your property into a trust.
Why do companies require uninsured deed affidavits? And what is an uninsured deed?
An uninsured deed is when somebody transfers the property from one entity to another without the benefit of title insurance. So there was no escrow. They didn't get a title policy. The title company didn't do a title search. And so when we see that as a title company, and now let's say you transfer the property into your trust or whatever, you did some kind of transfer without title insurance, and now you're going to sell the property, we're going to look at that and immediately say there was no title insurance. There's no searching of the chain of title to confirm everything's in order. And so we're going to require an uninsured deed affidavit, which really, as a title company, what we're asking you to confirm, if you're the person who transferred, was, did you really intend to transfer it? In other words, you weren't coerced into transferring your property. You weren't transferring the property to avoid paying some kind of debt or mortgage. You had the mental capacity to transfer. So because there was no title insurance, and we want to be able to provide title insurance to a new buyer, and there was this sort of question mark on the chain of title with no title insurance, this deed, we need you to confirm that as you're the person that, hey, yes, and you just basically fill out, it's a one-page form. It gets notarized. We take it and we go, okay, great. You've given us peace of mind that everything was done legitimately. Now we can move forward with transferring the property.
If you could go through a few scenarios and different types of investing, that would be great.
Yeah, it comes up a lot, and people want to make sure they do the right thing and take title the way they feel like they should. Obviously, if it's a complicated situation, I always recommend talk to an estate planning attorney who could really give you absolutely solid legal advice. But generally speaking, so a couple different ways. So first of all, if you're an individual, typically you would take title as a sole owner. So Jared Waller as a sole and separate property, that type of thing. And then you get into multiple ownership. Typically, that's where two or more people are taking title. One way to go about that is a joint tenancy with a right or survivorship. So basically, anybody taking title, you have equal shares of ownership. And if any of those owners passes away, their share automatically transfers to the surviving owners. That type of ownership, joint tenancy, has been around a long time. A lot of people over the years, that's how they, husband and wife is joint tenants. Now people are adding joint tenancy with a right or survivorship. That's just on the title of the deed. Tenancy in common, that's where two or more people own a percentage of the property, and the percentages don't have to be equal. So you could have three people. Person A gets 40%, person B gets 40%, and person C only gets 20%. So that's a different way to hold title. So it's not equal, and each person can sell their interest in the property easily. Community property, obviously, if you're married or you have, domestic partner type of thing, state of California, when you take title, a lot of people take title as community property or community property with a right of survivorship. And that's just adding on that if one of the community property members passes away, it automatically transfers to the other person. And then you have the other two different kind of ways, or really if you take title in a trust, typically if you're transferring property to your trust, you're going to put, the Brad Hobson trust dated, whatever. You're going to just put the actual name of the trust. So that's another way to hold title. And then, of course, you have corporations or LLCs, and you can take title that way. So you've got really single ownership and then multiple ways as multiple people, and then sort of trust or corporate entities.
Because I know how I rely on you in a real estate transaction, but as far as the title officer, what do you do in the real estate transaction?
So I'm the sales executive, and so I work directly with people like you and Dan, and I'm your liaison to the company. You and I have a relationship, and I'm the person who gets you a lot of property information. And then the actual title officer is the actual technician having the report created to show condition of title and actually coordinating with escrow to close the deal. So I'm not not a title officer, I'm a sales executive. And then the title officer, I work with Patty Meredith. She's one of our great local title officers here in San Diego. She actually coordinates with the escrow on the opening. We create the report that shows condition of title. And then at the end of the deal, she's the one who coordinates with the escrow to get the deeds recorded, the new mortgage recorded. And then we let everybody know, hey, the deal's confirmed. Everything's been recorded. There's a change of ownership. It's official.
Just to kind of elaborate that on my side, a big benefit in ways you help is I usually ask and bug you for a color-coded easement plat map. That means identifying where on the specific property easements are. So really helpful for my client. They don't like any surprises there. They want to make sure that all of a sudden they don't have an easement running all the way through their property. I like a nice condensed email, which, Brad definitely gives me. He lets me know easements, but he also lets me know if there's any liens out there that I'm unaware of. And more importantly, if the taxes have been paid or if they're open. It's a big help for me too, because in the transaction as the agent, we're trying to corral all this information and regurgitate that to our clients, most effective and very concise in making sure that they understand it. So it's definitely a big help.
What you're referring to is when a transaction starts, we're asked to search the chain of title on a property and issue what's called a preliminary title report. And then we send it out to all the parties, including Jared and the lender. And so I do a quick summary for Jared that says, hey, here's a summary, quick little bullet point of the whole title report, which is really, it's going to show you the ownership, give you a legal description. It's going to tell you if the property taxes are current or not. And then it's going to give you any other liens or encumbrances on the property. And then if there's easements, so you might have utility easements, SDG&E easements, or access easements, those are recorded documents as well. And then we also send out a map. It's a color-coded easement map that shows you a picture of the plat map of the property, and then in color where those easements go, so you can show a buyer or seller where these easements affect the property physically.
Is there anything else that buyers should know and or ask?
Title insurance, it's a pretty complicated, technical type of insurance policy. If you're a buyer and you're in a transaction and you're going to have to, one of the things you're going to have to do is review the preliminary title report, which again is the condition of title of the property you're getting ready to buy. And you're going to have buyer's agent to maybe ask questions. There's a lot of information. If you're not comfortable with it and just have questions about it, you can either reach out to your real estate broker agent, someone like Jared, or Jared would put you in contact with me. I've many times in my career got on the phone with a buyer and just kind of walked them through the report, really tried to simplify it to let them understand exactly the condition of the title and ultimately what is it they're really inheriting here on the property related to title. So it can be complicated. It doesn't need to be. You have people in the industry that can help a buyer really get to a nice conclusion on what they're looking at.
There's one more thing that I really want to comment on that you really helped me out in the past is I had a property that had just this fabulous view, going down to the water. One thing I leaned on you for is just actually knowing the buildings in front of it. I asked you, hey, can they build up? What are the current code requirements? Of course, code can change. We all know that. Could they knock down this building and then build up to a certain height to then restrict that view? And that was really important. One, you did research and got back to me in regards to several buildings in front of our particular building, just to make sure that, again, our client's view is preserved. So there are things like that too, that I will say I lean on you in regards to kind of going outside your scope of what normal day to day and helping me research and get back to the client.
Yeah, it's it's interesting to say that because everybody's so focused on the property they're buying, but yeah, when you're in situations where either it's a view area, you want to know like, hey, are the people below me, can they build up, or is that the max they've already gone? I know my view's protected. Or if you're in an area where you might see other large scale developments kind of popping up, maybe in the metro area, North Park, University Heights, where there's a lot of these big, huge apartment buildings going up. Those are the types of things you're referencing that I can research and confirm whether there's view property restrictions or, hey, what's going on with the zoning of those properties in front of you? Can they build up? Can they not? Is there anything planned? I research a ton of development stuff. So you got to kind of see big picture beyond your property sometimes.
Why a title report is really important for a condo.
With a condominium, it's a little bit different in that the legal description's a little bit different. It's, single family. It's typically part of a subdivided property. So you had a developer come in and subdivide all the lots, and then they built these individual homes and they sold them to you. With a condominium, not the case. You've got one underlying parcel, and then they record what's called a condominium plan that says, hey, we're going to build 100 condominiums. And really with a condominium, when you look at what am I really getting, you're really technically buying just the airspace of the condominium, which the legal description kind of spells out. And then you have things like common area, and you have things like, hey, what storage space do I get, or balcony space, or parking spaces. The title report report for a property that's a condo, it's a little bit different because there's some additional items. There's CC&Rs. You want to know, hey, here's the rules and restrictions of this community. So yeah, it's different, Dan. That's a good point.
Dan, do you mind going into detail in regards to why that's so important and how that can affect lending?
Title insurance protects my ownership. And the very first thing I do when I get a condo, a lot of times what I do is I go and I look to find out, do they own the land underneath the property? So here in California, they're called condos. There's a long history behind that whole story, which I don't want to get into. We'll be here for days of why California decided to do it this way. But like in the East Coast, you have townhomes, and those are not considered condos like they are here in California. And that's mainly due because they don't own the land underneath. And so what I'm finding now more and more is that these townhomes that are being built, the newer ones, they tend to have the ownership of the land underneath. And so what critical is, it changes the whole dynamic of the loan structure, because it's essentially not a condo loan anymore. It becomes an attached PUD is one way of doing it, or just a PUD outright. So they may just have one shared wall. Just because it's a shared wall doesn't make it a condo, even though by all intents and purposes you are buying a condo. For lending standards, as long as they own the land underneath, we'll consider it a single family type of loan product. So your rate can change by almost 0.5% in some cases, depending on how much money you're putting down, of course. And so that's why I always try to get into that title report as soon as possible to see, hey, what's going on in here? What do I own? What do we not own? And then I can make the assessment at that point whether or not we can get away with having it be considered a single family home. What would you suggest? Let's say a brand new home buyer's never bought a house before in their lives, and I get this question a lot that says, I don't know how to read this thing. Like, what I don't even know what's in here. What would you say is the best way to instruct them on how to review the title report? I mean, normally Jared is so good at, he goes through it ahead of time and just kind of is able to walk them through it. What would be the best way to help them with that?
On the title report, it's going to give you the name of the company, the title officer's name, their order number, and a phone number and an email address. You could just reach out directly to the technician and say, I need you to walk me through this and explain this to me. Now, you could also ask your agent to have the title salesperson do that. I'd be happy to do that, but definitely just go right to the source. And the report tells you exactly who the title officer is and their contact information, and they'll just go through it step by step with you and get you to the point where you understand it and can make sign off on that contingency.
We've had some very good surprises, for clients, and in regards to finding out that there's ownership of the land when the listing agent had no idea of the ownership of the land. So it is extremely important that reports are being thoroughly read through, and of course, just asking questions or have any questionable items within that report. But it is extremely important.
People want to know, does title insurance cover the legal address of my property? No, it actually, we insure the legal description. Technicalities, that's one thing. Title insurance does not cover whether what the zoning of the property is. Title insurance does not cover any damage to the home. People get sometimes confused with homeowners insurance and title insurance. And we're covering things that affect the title to the property, which is basically recorded documents and your legal ability to own the property, to have access to the property, things like that. Yeah, exactly. So we're not confirming that the property is zoned for multiple units versus single family. Any government regulations or restrictions, we don't cover any of that. Yeah, so title insurance is covering you for your ability to have free and clear ownership to the property and access to the property. Homeowners insurance. And the other thing is title insurance is a one-time fee. And once you pay that one-time fee, you have title insurance policy coverage for as long as you own the property. Homeowners insurance, I'm not a homeowner person, but it's covering you for the contents of the property or issues with, floods and things like that. It's also, semi-annual fees and charges and things like that. So title insurance is covering you for things that have happened in the past related to ownership of the property and titling to the property, whereas all other types of insurance typically are covering you for things that can happen in the future. Auto insurance, homeowners, life insurance, it's a completely different thing. And you have to pay ongoing versus title insurance you pay one time.
You also look at title to look at the CC&Rs in which knowing today's laws, which ones actually are real and which ones that have expired. I mean, there's a lot of CC&R language that no longer applies in today's real world because it was either discriminatory, I hate to say it, misogynistic. It was, there's a lot in which are now, no longer relevant in today's world. Title insurance protects my right to use my own property.
With a title insurance policy, you only have to pay one time to have the lifetime benefit of a title policy. CC&R stand for conditions, covenants, and restrictions, which a lot of communities, when they're first developed and the homes are first built and sold, they conditions, covenants, and restrictions, or CC&Rs, which generally give you the law, the restrictions and law, the governing rules for that neighborhood or that condominium project. And if they're really older CC&Rs, so I'd say pre-1960, in some cases they have discriminatory language, or in some cases they expire because they expire after 30 years or 40 years and they're not automatically renewed. And understanding if you're buying a property and you're looking at your title report that's one or more of the items is recorded CC&Rs, as a buyer, you absolutely want to read that document. It might be 100 pages long, but you really want to understand what the existing rules are for that project. Reach out to learn more.